ended up making 50 to 60% return in on the listing day. So that is what happens when the traders are trying to buy the IPO. So whether Rolex rings, what do we expect Rolex rings to do, what it is into all about, let us look at it in a very different way in today's seminar that we are conducting. So let me very quickly share across the screen now, and we are going to look at what's happening with Rolex rings and is it the time in order to invest in this IPO given the market conditions. Yes, that is also very, very important. You understand the market conditions also. Before we proceed, I would just like to show this disclaimer. We are SEBI registered research analysts. You can see the research analyst number, and all forms of trading or investment carries risk which might not be suitable for everyone. Okay, let's just move on. And this session is purely informational in order to create awareness in general public, and does not constitute a recommendation or an advice. All views expressed are personal way strategy advisors or OCL does not bear any liability. Let's move and look at what is Rolex Gold Rings all about. The IPO is currently being opening today, and it's going to close on 30th of July. So you have 2 days if you want to invest into it. The face value is 10, which is usually the case for most of the IPOs. We know that, and the price band is 880 rupees to 900. Now, if you have to apply, you need to ensure that you have to apply within this price band, and per market lot is 16 shares that you can take on. What is most important information for me out of all of these that you can see it on the screen is when you are looking at something like the IPO listing date, it is on 9th of August is the listing date, and the basis of allocation of the IPO is going to be decided. As you can clearly see here, the allotment date is 4th of August. So once you receive the IPO, you might be wanting to sell it on 9th of August or maybe keep it for investment. For taking that decision, we will have to first understand what is the overall business and why they are into this raising of funds from the public. So the object of the issue that you can clearly see it here is in order to raise funds for long-term working capital requirements. Now, for any businesses, that can be a very important requirement, and that looks very, very logical and sensible to me. And general corporate purposes, yes, we understand that for running the show, you require a lot of funding, and that is what they are doing by coming out with this IPO. But let us also understand what are they into actually, and what are their competitors also doing. So we need to understand all of these aspects very clearly. And as we proceed, we are also going to look at the stock charts of its peers, which we normally many people do not do it. So we are going to also look at that. So Rolex Rings is among the top 5 forging companies. Now, this is falling into the field of auto components, auto ancillary. And for understanding how the auto components and auto ancillary is currently doing, we will have to look at that also. So it is falling into the field of auto components and ancillary, and we can understand that not now, but since 2018, if you look at the overall auto sector, since 2018 till March 2020, that sector as a whole was not doing well. But post March 2020, which is March 2020 is the low which formed on Nifty, the low formed in the auto sector, low formed in auto ancillary stocks. Most of these stocks started outperforming. So the correction which happened during this period changed. So I'll come to that again. So what I'm doing is I'm trying to mix up the fundamental aspects of what is this IPO about, along with the technical aspect in order to understand what the peers are doing, how the entire sector is doing, a lot of those things. So the company has manufacturing facilities in Gujarat. That's a plus for me. And nearly 53% of the revenues come from bearing rings and 38.5% from the other automotive components. Okay, top 10 customers account for 72.6% of the revenue. Now over here I am little concerned because top 10 customers account for 72.6% of the revenue. This is little concerning, but nevertheless it is still doable because the exports account for 56% and remaining is also the domestic consumption. So I would say in terms of the export and domestic consumption, it is diversified, well diversified. A little concerning sign that comes for me is the customers that account for is 10 customers account for 72.6, but I'm sure as we progress further, they are going to diversify further into more acquiring more clients and customer base. And once that happens, the risk will get minimized. The company supplies over 20 companies, over to 20 companies across 17 countries. Now, again, that's a plus because now your risk is not focused on one or two continent like US or UK or specifically, but it is diverse across different countries. That is a plus for me. So overall, if you are looking at the overall business strategy that we are looking at for Rolex rings, I think it's a plus so far because it falls under the top five forging companies. The overall auto sector has started outperforming. The revenues that they are getting is from the auto components and also from the bearing rings, which again is diversified. Export is there along with the domestic consumption. Let's just move on further and look at some financials right now. And where do we stand with respect to those financial when we compare it along with the overall period? Okay, the company promoters, you can see the names of the promoters. If you want to do more homework on promoters, you can deep dive searching those names and seeing what are their background. We are not going to do that right now. What is important is the promoter holding. Pre-issue share holding is 58.99%, and post-issue it is still 57.64%. For me, that's a commitment promoter is showing within the company, and they are still going to hold on 57.64%, and that's a very positive sign because promoters are committed and they see the growth in the company happening, and that's why they are holding on to their 57.64% of the percentage holding in the company. Now let us look at a very important aspect, which is the overall scenario here, which is profit after tax. That is what I'm going to look at now. From March 19 to March 20, okay, March 2019 to March 2020, these are the figures that you can see. We can clearly see that there is a dip. Now this dip, I would also attribute that dip which happened not only to this IPO of Rolex rings, or sorry, not only to the share of Rolex rings, but also if you look at the other components, if you look at the other companies, you can clearly see that that period was not good for majority of the forging companies, majority of the auto sectors, because and also the pandemic has hit in the first quarter, in the last quarter that we saw during the period from Jan to March 2020. But post that, there is a very big increase that we can see in the profit after tax, nearly 64% increase that has happened post that in that period. Now, one thing is very important that you have to keep a watch on. This was the period that we can clearly see when the pandemic also continued to increase. Despite of that, despite of the vulnerable car sales that we have seen, despite of slower demand, the company managed to report the profit after tax with a jump of nearly 64%. Now that's a plus again for me during that period of time. Now, if I'm looking at the earnings momentum, we can see a slower momentum in this period, but a very sharp rise here. Now, this is a very limited data basis of which you can decide what is the growth or what is the earnings momentum year on year increasing. We require more data for having a very high conviction. So when I talk about earnings momentum, it's a very simple way to look at it. How fast the earnings are increasing. So far, we have looked at momentum of the market, but right now I'm talking about momentum of the earnings. So when I talk about momentum of the earnings, it talks about with how much speed, how much pace the entire earnings are increasing. Because see, ultimately, if you are going to become a shareholder of the company, you have to keep a watch on how much is the earnings going to increase year on year from here on. That is what we are trying to discount the future to the present value. And if we have to do that, we need to understand that concept very well. So for me, a jump without any exceptional profits is come from the business, shows a 64% jump, is a positive sign for looking at the entire structure over here so far. Let us also now try and look at the peer comparison. Okay, so peer comparison we are going to do in terms of the valuations that the company is demanding at this point of time versus the already established players in the market, big players like Bharat Forge. We can clearly see that comparing Rolex rings with the competitors like Bharat Forge, Ramkrishna Forgings, and Forgings. Essentially, these are the companies who are in the similar line of businesses, and that's why we are trying to compare that. You can also compare it with other auto ancillary companies, but this looks to be more sensible for me. The overall income, total income might be little on the lower side because Bharat Forge is a very big company, but I would be still pro on this because there is a potential to move from the current level that they are showing to the next level that even the second or the the first or the second competitors are showing. So RK Forgings have nearly 1294 as the total income, and there is a possibility here where Rolex rings, if does well, the management is committed, they can move there. If they move there, then yes, there will be more profitability or earnings available for the shareholders also. Let us look at the valuation. How expensive is this IPO going to be? Let us just keep a watch on that also. So Rolex rings is quoting, will be looking at the current price band, will be quoting around 24.82 as the price to earning ratio, which looks promising, right? If you look at the entire auto sector price to earning ratio, you can still see that it is near the range of 30s. So we are still in a very, very commandable position over here. RK Forging is showing a price to earning ratio of 116. Mind that, that's a huge valuation that it is asking for. Depends on what is the growth also. So only price to earning ratio is not the factor. We also have to incorporate what is the growth. So if RK Forgings is expecting a growth which is going to be exceptionally good, and also they are expecting that their price to earning ratio is fair enough as per what they are thinking, then I don't see any problem with the price to earning ratio that Rolex rings is demanding at the current listing that they are looking at the current price that they are offering. Forgings is again having a price to earning ratio of 38.64. So if you look at the overall price to earning ratio from the perspective of the mid cap and the small cap auto ancillary space, you will see that mostly they are on an average basis, they are somewhere around 40s in that zone. And Rolex rings is demanding price to earning ratio in the zone of 24.82. Yes, it is demanding a little less valuation because given the fact that you don't know the history yet, right? Or for RK Forgings or Forgings or Bharat Forge, you have the entire history and entire functioning. So that's why I think it is fairly valued. And there can be a good listing going forward from here on. I think it's a buy, but you have to take a call. We are not here to advise you to invest or not to invest. I'm just here to talk about what is the overall financials are looking at this point of time. Return on net worth, you can see it here, is 24.38. Comparatively, Ramakrishna Forging is 2.3 and is only 9.6. So overall comparison with the peers show it is very well positioned, very well placed at this point of time. Now let us look at something different. Market sentiments. I'm sure you might be already aware about this financial and you might be read it in a lot of prospectus and a lot of places. But let us try and look at the overall market sentiments. Yes, it's very important that you do not forget what is the overall sentiments. When I talk about market sentiments, suppose this IPO would have come during the period of April 2020, the listing, the subscription would have been lower. That is what I think. The subscriptions would be lower because people were panicking. Okay, there was a pandemic chaos that was going on, and the listing would have been also subdued. So market sentiment is extremely important to understand. I think overall there are so far in 2021, so far I think if I'm not mistaken, or over the period of year, there are 21 IPOs which has been launched. 21. The latest one we know is Zomato, which demanded nearly 50 to 60% listing above the offer price, and that valuation was already too stretched, and still it demanded 50 to 60%. So the market sentiments, looking at the listings of the recent IPOs, looking at the overall market movement, I think is still positive. So when an IPO comes in the positive market sentiment, there is a possibility you might get a good listing price. That's an assumption, right? Things can change from here till the 9th of August of listing. Things can change, and that can also result into a little risk. That's the risk that everyone carries. Let's look at a different way of looking at the overall sector now. I'm showing you a chart which is known as a Nifty Auto sector. As I said, in 2018, okay, this was 2018, Nifty auto sector formed a top in 2018. Yes, as I said, this sector was in doldrums much before the pandemic that many of the people would not have been aware of. People would have been blaming the pandemic for the slowdown in auto. No, this sector was already struggling way before that. In March, so the March pandemic happened here, and post that there was a huge correction that we saw. So nearly this is an auto index, Nifty auto index I'm talking about, corrected sharply from the levels of what 12,000 towards the low of 4,500. That was a huge correction that we saw on the overall sector. However, once the low was formed, this sector showed a very strong outperformance and is coming back to the original levels which we saw earlier and way above the 2020 March top also. It's way above from here. That's a good sign for me because it shows that this sector is strongly outperforming. What does outperformance means? Outperformance का मतलब क्या है? Outperformance means that this sector is doing extremely well compared to the other sectors. Yes, we are going to also compare it with other sectors to understand. See, what is very important, people forget that. They forget the market sentiments. They forget whether the stock is placed in the good sector. Okay, we can clearly see that now. If the sector is in doldrums, so if you look at pharma, we clearly saw a huge correction happening in Dr. Reddy recently post the results, and the entire pharma pack was down. Despite of good stocks within the pharma space, they were still down because Dr. Reddy posted a bad result. Same stuff here. If the sector is not doing good, you can't really expect the component of the sector. Yes, the subcomponent of the sector, which is the auto stocks or the auto ancillary stock, to do well. But over here, I can see the sector has done exceptionally well, showing amazing returns from the lows of 4,500 odd levels and going back to that 10,000, 11,000 mark. That's a very plus sign for me. So the sector is supporting that the listing can be good. Let's look at the other things. Now, auto sector in comparison to Nifty that we are looking at right now. So I'm again taking example from the lows of March because that is where the important lows was formed. And you can clearly see that from that point onwards, Nifty has delivered nearly around approximately, I'm talking about 80 to 85% return. Comparatively, auto sector has delivered somewhere around 100 to 110% return. That's an average I'm talking about, which means auto sector started outperforming Nifty, which is a good sign. Okay, the auto sector outperforming Nifty is a good sign for me. Let's see the performance of auto comparative to the peers now, other sectors. So we look at IT, we look at financials, we look at banks, we look at all of those components, and let us see how this sector performing compared to that. The topmost sector, this is a sectorial chart. We call it as a sectorial chart. Don't get confused. It's a simple chart here. I am just trying to point at a March April lows and trying to see कि वहां से कितना return बना है. That's the bottom line. If you look at the metals have been too heated up. We can clearly see that already gone up and away, too expensive. Done. We can see that this is Nifty. What you see over here is Nifty. Compared to Nifty, auto stands here, pharma is here, and IT is here, which means these are the three sectors since the lows of last year are outperforming overall Nifty index. And I look at FMCG where they are right now. I have a huge conviction that auto sector being here has the potential to gain momentum eventually, which means that this should outperform the overall broader market is what I am looking at this sector to do. So auto sector is very well placed. So if auto sector would have been still in the doldrums, still had been somewhere around this area, then I would have not been so gung-ho upon the auto component IPO, which is Rolex rings. But since the sector is outperforming, we are seeing nearly about 105% returns compared to the lows which was formed, and compared to the peers. I think auto is very well placed, and next 3 years this sector should do exceptionally well. अगर आप सोचे एक चीज, during this period of pandemic, not many people have spent on buying luxury. Not many people have spent on buying cars. Not many people have spent lavishly because survival has been questioned. Now, when the survival is taken care of, the next thing that they are going to look forward to is something which belongs to luxury, which is also a necessity nowadays. So they are going to look forward to auto as the very important product. Then they will look at real estate. The reason why real estate comes later is because real estate, for that you require big money. Okay, so auto is the first beneficiary which is going to be emerging once this demand cycle starts picking up, which is already picking up. And that is what we are seeing in the stock. Now let us also look at one very important aspect of the people actually forget thing that you have to keep a watch on. Peer stock price movement, very crucial. Why? Over here you can clearly see that RK Forgings has moved from somewhere around 160 points, 160 level to 820. That's a huge movement that we saw in the RK Forging, and it's a very close competitor to Rolex Rings, or very close peer to Rolex Rings. They are also into forgings. Okay, now this stock performed so exceptionally well despite of commodity prices going skyrocket high, which means whatever the demand was going up, the stock is going up. So I can clearly see that demand, whatever the cost is increased, they are able to pass it on to consumers, and that's why this is outperforming. And they are able to make a, assuming they are going to be profitable or making a good profit out of it, and that's why the prices are going up, which is a plus again. Look at the Bharat Forge stock price. Again, a very sharp rise that we can clearly see from the sub 240 levels towards 780 levels. Now that's a good trend. So we are in the direction of a very strong positive trend in this peer stock also. The next one, Forgings. Look at the momentum in this stock is crazy. This, and in fact, post May 2021 or June 2021, they have shown a very sharp rise at this point of time. Now that is again a very promising momentum that we have seen from Forgings. Now, given this fact that the competitors are showing such a strong positive breakout and momentum, so when I'm talking about momentum, actually, what is it? It's nothing but the speed with which the stock is going up. The speed over here was slower, that's the slope. The speed over here was much more, and that is what it is talking about. So I can clearly see Bharat Forge doing well, Forging is doing well, RK Forging is doing well. Now you might try and think that why to buy Rolex rings and why not these stocks? These stocks have already rallied. They have already demanding a higher valuations. But Rolex rings is still placed at a fair price, and I think should do well. Even people look for the listing day gains. I'm not here to talk about listing day gains. I'm talking about if you have that stock in the portfolio, looking at the overall sector, looking at the overall auto component stocks, I think the next 2 or 3 years is going to be for them. And that's the reason why you should be looking for buying the IPOs and not necessarily for just buying it because it's an IPO. Okay, I hope that makes a lot of sense, and I'll be open to take any questions. And is it an interesting way of looking at the markets? Before I take questions, I would also just like to disclose a very clear disclaimer. Where Strategy Advisors, we are SEBI registered research analyst with the RA number being mentioned here. Uh, and we are not acting as a manager or co-manager at any time for IPO of Rolex Rings, not participated as an underwriter for the said IPO. We do not have financial interest in the subject company as of now. So please ensure you read it very carefully. And also, this session, as I said in the earlier disclaimer, is purely for educational, to create awareness. And what I talked about is what I see. Okay, you have to ensure you consult your financial advisors, consult your, in order to take any position or invest in an IPO, OCL or Waste Strategy Advisors do not bear any liability for the same. Okay, I'm open to questions. These are the coordinates. I'll be more than happy to answer if you have any questions. So overall, it's a very interesting scenario that we are looking at from the IPO perspective, from the IPO space. Okay, great, fantastic. Anything else? I can see there has been a question. Uh, we are not talking about Glenmark right now. We are talking about Rolex rings. So I'm not going to be talking about this. Okay, and okay, I think there are not many questions that have come up. So it has been a very interesting session. Ensure you take all due care before you invest. We are also going to keep a watch on how the listing happens, what is happening, but ensure when you are investing in an IPO, do not just buy the story. Look at the entire analysis, do it yourself, apply your mind, because then it's your money. You need to ensure you put it in the right place, and it's very, very important that you do that. Okay, something about Rolex debt. Yes, they are going to repay off the debt from the raising of the IPO. That's what they said. They are also raising it for the capital that they might require, and they are also planning to pay off the debt. And I think that's a good sign, right? You're reducing your debt burden by the issuance of equity shares, and that's a good sign, because then your debt to equity ratio improves. Then you are not burdened to pay off the interest that you are was outgoing, and that can be plowed back in order to make the company more profitable, in order to expand, in order for capacity expansion. A lot of those things can be done, so that can be very, very important. Okay, I can see another question. Is it a right time to put my money in it for short time? See, there is always a risk when you are looking at a short time investment. Try and understand. There is a risk involved when you are looking at that, because uh, for the short time, when you look at, you also have to understand how the markets pan out till 9th of August. It's important. The reason I said market sentiments is crucial. That's why you have to understand that on the listing day, no one knows, to be very honest, on the listing day, whether it's going to list by 100% up, or it's going to be like subdued, or it's going to be sideways. You don't really know that. So for short term, I would suggest, if you want to buy this, then you have to do your own homework. But I would suggest, if you want to invest for a year or 2 years, then you can look within the company. Okay, can we hold on Rolex rings for long term? Yes, that's what I said. So that's why I'm showed you the overall performance of the peers also, how the stocks have done, how the sector is looking at, how why it is outperforming now, and why the demand should increase from here on. That's why I am saying this can be a good investment from the long term perspective. Okay, I can see. What about Glenmark Life? Sorry, we are talking about Rolex rings here, not about Glenmark Life. That is, yeah, your call that you have to take. Okay, does it answer the question? Fantastic. Okay, and I'll just take a last question if there is anything, because then I think we are right on time. And okay, I can see here about also. Okay, it's a great information that you have got. Period for holding of Rolex IPO. So in order to the period, I would suggest at least a year. Okay, I would suggest at least a year, but you should be okay even if the stocks are going down, because of the systematic risk. Even if that happens, you can hold on to good stocks, provided the company and the management is committed. And looking at the management and the promoters holding that we are seeing, to the extent of, I think we saw that 57% approx, if I'm not wrong. I think they are committed. So I don't think any concerns from that perspective. But yes, you also have to evaluate in terms of how the earnings momentum go from here over the next few quarters. That is going to be important. We also have to evaluate how the stock prices are performing compared to the peers, so that we know it's in the momentum space when we are looking at those kind of charts also. So it's an ongoing process of evaluation, but I think should perform well. Okay. What about the PE ratio after listing? So see, after listing, we don't really know if it lists at a 100% premium, right? So the P ratio might become 48 or 50, around that zone. Then right, it might be little stretched to buy after the listing. I don't know that, right? You don't know how the listing is going to be. So we can't really comment after the listing, shall we buy, and is the valuation fair enough at that point of time? We will have to see that. So if you are not getting allocation in the IPO and you are thinking of buying it on the day of listing, it depends on what is the price on the day of listing. Also remember, on the day of listing, the movement can be very short, right? So you need to be prepared for those risk factors also. It's important. People forget about the risk and they simply want to jump in on anything and everything. No, understand the risk, what you are dealing with, and on the day of listing, if it moves by 20-30% easily, then you have to be careful about that. Okay. Like today market is falling, maybe Rolex will fall on the listing day. Lucifer, that's always the risk that is there, right? As I said, between now to 9th, there is always a risk. So, but if you are not buying it for a single day perspective, okay, what I'm again repeating, same stuff again and again, you need to buy the business. When you're buying the business, you need to look at how it can perform over the period of years, not over the period of one day of listing. That's a short term momentum. Agar mujhe short term play karna hai, I can possibly go in the markets and buy calls and puts and possibly trade those, because I don't have the risk there. I know how it's going to behave. But if I am going to be buying it for just the listing day again, then you need to do your homework. I'm not commenting on that for sure. Okay, that's it. I think we have answered most of the questions, and we are right on time. Thank you very much, guys, and have an amazing time. Take your trades based or investments, consulting your financial advisors. This is Ashish Gal from Wave Strategy Advisors signing off. In case you have any queries, any doubts, you can always tweet out to us on @KyalAshish. Ensure you also tag Paytm, because they are doing exceptionally well, and I really thank you, Paytm Wealth community, for giving this opportunity to be speaking on this wonderful platform here. And have a wonderful day. Become a wonderful investor and trader. Thank you.